based on the media overload you've gotten, are you wondering if it's okay to miss a mortgage payment this month? And
Absolutely not.
what is this mortgage forbearance? How does that work? Well, that's what we're talking about today. Hi, I'm Cecil Volsch, realtor in the Inland Empire and High Desert, sharing tips, insights, and updates to help you gain clarity in this information overload today. And today I'm here with Frank Stefanos from PRMG. I believe he's Executive Vice President, but I'm sure he'll correct me.
Yeah, the Executive Vice President will give me a call. I'm the Regional Manager for Southern California. And
there you go, Regional Manager of Southern California. He appears to be Executive Vice President. So Frank, thanks for taking time away from your really busy schedule right now in today's new world to shine a little bit of a pinpoint flashlight on key mortgage issues right now.
I will do all that I can. And then actually that's Paramount Residential Mortgage Group.
Paramount Residential Mortgage Group. Thank you for that.
PRMG. Mm-hmm.
So since we are at April 2nd, I have people asking, is it okay to miss my mortgage payment now since all of this forgiveness talk is going on?
Absolutely not, Charlotte. First and foremost, you and I are not attorneys and we're experts in this specific field, but we are obviously professionals that are greatly impacted by that. And this is such a quick moving topic. The mortgage meltdown back in 2008, 2009, 2007, 8, 9, that took months to develop. This is developed in weeks. This is developed in a month. There's just so much movement on here. And so a lot of the information is misinformation. Mm. And, with that said, there's a lot of blogs, internet information going out that is misleading or misinterpreted, misconstrued, and it's not accurate. Mm. And us, even as mortgage lenders, are in a position where we're saying, guys, we're not the attorney, we're not the experts on this, other than we know where it's going, or at least we believe where it's going. We can see where it's going. And with that said, we're very cautious on giving advice on what to do, but we do have a recommendation.
And your recommendation is to definitely make your mortgage payment.
First and foremost, if you can, make your mortgage payment, make your mortgage payment. And it's not just for the benefit of the consumer. Might think that this is, it's only going to benefit my mortgage company, of course, if I make the mortgage payment. And that is on a small scale, yes, definitely. But on a grander scale, I was listening to some information this morning, another webinar, because there's webinars daily, that if 25% of the people that own mortgages, or have mortgages, not own them, have the mortgages, if they were all to do a forbearance, that would require a full liquidity of $70 billion. So in other words, all its lenders, all its banks, basically need to come up with $70 billion, because even though the consumer might stop making those payments, the lenders make the payments in a sense during that time, because we still have agreements we have to uphold.
Correct.
So, I think last year as a whole, the mortgage industry profited $10 billion. So now they're asking $70 billion for the first 3 months. If that extends even further, double that, $140 billion. So this could be hazardous. So, and almost irresponsible if someone who is in the position to make the payment not to make their payment is, in my opinion, irresponsible. There is a new government has created the CARES Act. And if you were to look into the CARES Act, one of the first things you're going to see there is if you can make your payment, make your payment. Now, if you can't make your payment, what we suggest is actually very simple. 2 things. Contact your servicer and then contact HUD. HUD will protect you, the home buyer. The servicer will know the agreement that they will have with you. And in all honesty, the servicer works for the benefit of the banks, of the investors. You want HUD on your side. So I say contact HUD for their counseling, contact the servicer for the terms of the agreement, because there are going to be so many different types of agreements. Why is that? You've got Fannie Mae, you got Freddie Mac, you got Ginnie Mae, you got private investors, you got private banks. Not all loans fall under one umbrella. So there's just so much out there that unless they speak specifically to their servicer, find out who is specifically insuring the loan, again, FHA, or it's an agency product such as a Fannie or Freddie Mac or a VA, the terms may different in regards to your forbearance. And then just because you do a forbearance, you're still responsible for that monthly payment. So the question is, how are you going to have to pay that back? Another concern is, will that have a negative credit implication? Well, you hear no. Okay, maybe not. You know, I think back in 2008, when people were short selling their homes, thinking, nope, I can short sale my home because I am allowed to short sale my home. You can. And then the lending industry looked at that and said, that's fine, you did. We are now going to underwrite that or view that as if you had a foreclosure. So there's other implications other than, yes, you may be able to, or yes, you have the right to. It has a consequence. So in other words, just because you do a forbearance because the government said you could, what's that going to look like when you go to qualify 6, 8, 9 a year from now? And in all honesty, I don't know. In all honesty, nobody knows. This is just moving way too quickly.
So, Frank, thank you for addressing all of that and the implications from any choice. They're both sided, so don't lose focus on that. But and when it comes to mortgage forbearance, how does that all work?
Well, the mortgage forbearance, how it works, again, will vary per your servicer. Again, one formula does not fit all boxes, all customers. You got the VAs, you got the FHAs, you got the Fannie Mae's, you got the Freddie Macs, you got the private banks. They all might have a different spin on this one. Mm-hmm. Some will say, hey, after your forbearance, basically you have a balloon payment. Some will say after your forbearance, you need to come up with a payment plan. After forbearance, you might need to just pay your interest only and then tack on there. There's just so many different ways of doing it. So again, I'm not going to call it the remedy, but the solution to the consumer's question can only be found by contacting the servicer, whoever that may be. And again, in all honesty, a lot of the servicers, being that this is moving so quickly, are making this up, and I say making it up loosely, as they go.
As they go.
All we know is that right now the president said, everybody can do forbearance. Great. Now everybody's scrambling to keep up with it, scrambling to keep up with their services agreements. And so it is a very, I don't want to call it liquid, but very quick movement. And to this date, again, it's subject to change tomorrow. It seems like every day we have some sort of a update.
And that makes sense just because of the speed that it's propelling.
Exactly. Exactly. It's horrible what's going on here globally in regards to the pandemic here. It's horrible. It's scary when you think about it. We get caught up in our mortgages. Then when you just think about the death toll that we've have been experiencing and the illnesses that we're foreseeing, and then the future death toll is like, oh my goodness, this is a scary, scary, scary situation.
And on the other side of that is a recovery toll, which is very high.
Yes. Yeah. Thankfully for that, absolutely.
Yeah. So on another note, what opportunities do you see for people that need to buy right now?
This is actually a great time to buy. Interest rates are still low. Okay. Sellers are still very motivated to sell their homes. And so if you're in a position where you can't qualify, because again, there's a lot of layoffs, so to speak, but if you're in that position where you can purchase, you are in a great spot. Again, low interest rates today. We expect them to stay relatively low throughout the year. Again, we don't know. So if you're just looking at today's market, wow, what a great time to buy rates.
And the rates are still in the threes. Is that true?
The rates can still be found in the threes. Again, it all
yeah, there's so many.
Depends on buyer's qualifications, loan type, etc. But yes, loans, interest rates in the low threes, yeah, they're still available. Absolutely.
And then from a refinancing perspective, why might someone say yes or no to that option right now?
Well, you've got the opportunity to, one, refi to a lower interest rate. Obviously, you're gonna experience a savings there on a monthly basis, maybe even over the long run of the loan on the overall interest paid. You might be in a position where you've got some equity, and with that equity, you can do a debt consolidation, so you reduce your overall monthly payments. Again, that's very important to today's households, is how much money are we putting out? So if you can consolidate your credit cards, a car payment, student loan, whatever the case may be, into your mortgage, reducing that overall expense, wow, why not? Absolutely. It's a great time to do it. Or if you're in a position, well, this is really scaring me, I'm in a position where I can actually pull some equity out and put some reserves aside. So I have a few months worth of reserves in the bank in the event of unable to continue employment for whatever reason. Or I'm going to take that money and invest. So yeah, for refinances, there's plenty of reasons to do so.
Very good. Yeah, there's just different ways of looking at every point. And, you know, for those of you listening to us today, our purpose is just to enlighten you on what's true. And when I asked Frank to join me on sharing what is true from a real mortgage operation perspective, I just was reminding him of how people made choices back in 2008 and 2009 to lose their homes because of bad information, when in fact, many of them wouldn't have had to go that route. And so I said, Frank, you like me want our friends and the people we don't even know to have accurate information to make the best choices now. So if you're in a quandary on what is your best next step with all of this, just comment below so we can get back to you with options based on your specific situation, on what your best next step may be. And Frank, do you have any closing thoughts for us based on all of this information and turmoil?
Yes, I do. This will pass. You know, the United States, we are a very strong nation. We've gone through a lot, and whether it's been with health issues, again, with my age, I've experienced, you know, a pandemic, so to speak, back in the 80s, maybe. Unfortunately, with the AIDS virus, a lot of social people were scared. And then we had 2001, that was we were under attack. And then 2008, we were under the financial attack. This is all put into a cocktail, mixed up, and it's 100 times worse. But guess what? We got through it. So what I ask people is to not to act on emotional fear. Look into what the facts are, whether they can make their payments or not. From that, talk to your servicer. Find your protection. Talk to HUD. We will get through this. We are a strong nation. And again, my heart goes out to all of those who are being affected health-wise. Again, it's devastating for many families. At the same time, as you had mentioned, Charlotte, the recovery rate is high as well. So come time, this will be behind us. I think we will all be in a position where we're much more educated on all kinds of different aspects. And again, we're going to come out of this stronger.
So true, so true. The American people is such a strong, strong people, and you can see it all around us, people helping people,
yes,
and looking to see how they can best support each other going through this. So that's such a great point. And, you know, again, we just wish everyone to be safe, to be healthy. Thanks for being with us, and let us know how we can help you, and we'll see you on the next time.
Thank you.
Thanks again, Frank.